All right, folks. Welcome to those of you who made it here in person and those of you online. Hope you're staying safe and staying warm. I already know that there's been some minor injuries all throughout, and so I hope they're not too bad. I guess maybe we can use this as a reflection to say that cold weather, along with ice and on the sidewalks and the roads, represents a risk. And so we need to have proper controls in place, and maybe those are lacking. Maybe we should be auditors for Truman State University's road precautions services. I don't know. I wouldn't want to be in that position. It's like because you never know what is too much and what is never enough. If you use too much, then the administration says, "Yeah, you're spending money we don't have," and if it's not enough, then people get injured. And it's a thankless job. It's a thankless job, much like being an auditor, actually. But today we are going to wrap up chapter 5. It's going to be our final lecture before the exam. So let's go ahead and let's kick off with something we already talked about. So we're going to go into a little bit more detail on this, and we're talking about the evidence, but I want to talk about the management assertions because I said it's really important to note. We started out talking about it, and I wanted to make sure everybody knew what the management assertions are. So we have 3 primary assertions. The first 2 are directional assertions. One of them moves from bottom to top, and it deals with whether something's got recorded. What is that called? Completeness. All right. And then we have one that's the opposite of completeness, which moves from top to bottom, which basically says we know something's recorded. We want to make sure it actually took place. Which one's that one? Yeah, existence occurrence. Okay. Then we have our 3 of the big 3, which has to do with the determination of the accuracy of the amount. I can't use a word that's not in it. I'm sorry, guys. What is that one called? Valuation, allocation, accuracy. So those are our big 3 assertions. Those are 3 primary assertions that are used in both categories of events. Then we talked about some more specific assertions that are less frequently used, but still really important. One has to do with whether or not we should have assets on the balance sheet or liabilities on the balance sheet for recognition purposes. What was that one's called? So I don't want to use the word, but the no, so recognition of assets that we have I'm going to give it the word. I'm saying we have the right to recognize assets on the balance sheet or the obligation to recognize liabilities. So rights and obligations. What I was trying to get at. What's unique about rights and obligations? So it's the only assertion that is in account balances only, and so that's important to note. Then we have a PCOB assertion, which has to do with whether items are correctly they're correctly disclosed on the financial statements or just correctly disclosed in associated documentation. What is that one called? It's the only one that's associated with PCOB only. And classifications are related, but classification to ASB assertion, which has to do with whether something is properly in the right account. This one has to do with whether something's properly disclosed in the financials. Presentation. There we go. Presentation is what I'm looking for. Then classification, we talked about whether something's in the correct account or correct account or not. Then we have an assertion that has to do with whether something is recorded in the proper period. What's that called? Which category of assertions does cutoff belong to? Transactions and events or account balances? Transactions and events. Okay. And what's the 8th assertion that's not really an assertion? Authorization. Yes. Good. All right. So we're starting off with a rolling start. All right. We're going to talk about documentation and wrap up with analytical procedures, and then we're going to have our discussion. So we got a lot to do, not a lot of time to do it. So let's start with documentation. Documentation, we will have a lot of focus on over the course of the semester. You've already done some documentation, whether you realize it or not. Those are the earthware clothiers papers that we've been working on for part of our assignments. Those are forms of documentation. When I use the term documentation, I want to be very clear. There are many synonyms for documentation that you will run across. So you've heard me use the term work papers. Also, working papers is another term. Whenever you hear those terms, they're all the same thing. Audit documentation, work papers, working papers. They mean the same exact thing. Now, there's some high points that I want to cover in documentation that I think that are really important to discuss. The things that we're covering is nowhere near a comprehensive exercise to cover documentation, but the things that we do cover, I think, are relevant. So what is the goal of audit documentation? It has 3 functions. First of all, to provide principal support for representation of the audit report that the audit was conducted in accordance with generally accepted auditing standards. So we haven't really talked about generally accepted auditing standards, but that has to do with the quality of the conduct of the audit. And these are different from like traditional audit standards. Traditional audit standards talk about the evidence that's supposed to be collected, the procedures. Generally accepted auditing standards are more about following certain protocols and making sure that you do the audits consistently time and time again. But audit documentation is basically telling us we reached a certain conclusion in the audit. Here's all of our evidence that supports that conclusion. We also want to use audit documentation to aid in the planning, performance, and supervision of the audit. So the audit is going to be conducted in a certain way. The audit documentation should outline how we're going to conduct the audit and what the steps are in those procedures. Finally, provide the basis of the review of the quality of the work by providing written documentation of the evidence supporting the auditor's significant conclusions. Audit documentation is intended for some external party or even an internal party to be able to look at the documentation and determine what happened over the course of the audit. So somebody who comes in is not associated with the audit should be able to work through the documentation and understand what work you did and why that supports the eventual conclusion that you reached. All right. Because documentation is the principal work of the audit, because it provides eventual support for the representations report, it should provide information regarding auditor compliance with auditing and related professional practice standards. So that's going to be not only just the PCAOB or the ASB rules that we've already talked about, but also generally accepted auditing standards, which are the standards that guide our profession and our conduct. We're also going to talk a little bit later about the code of professional conduct. That's not usually going to be covered as much in documentation, but could come up occasionally, particularly when we talk about independence. The basis for the auditor's conclusions concerning each material financial statement and evidence that the underlying accounts and records agreed or reconciled with the financial statements. So we will include information about the financial statements in the audit or in the documentation. And what we're going to find is that our work that we perform to test the financial statements should reflect back to that information in the financials. And we'll talk about how and why that occurs. So documentation, very, very important. There's an old adage that if it's not documented, it's not done. It's a little bit like, remember in math when you did math and you got really, really good at math, or many of you got really good at math, and you didn't show your work because you could think it out in your head and figure it out in complex equations. And your teacher always said, show your work, okay? Why did they do that? Because they wanted to make sure that you were not cheating, that you knew how to do the work itself. And some people are just kind of like, okay, I don't need to do this step. This step is very easy. 8 + 4 is 12. Okay, that's a very, very, very easy step. I don't need to show that step. The goal here is to say every single step has to be documented because we want to make sure it was performed and considered. All right. Audit documentation should enable a reviewer with relevant knowledge and experience to understand the nature, timing, and extent of results of the procedures performed, evidence obtained, and conclusion reached, as well as determine who performed the work and the date such work was completed, as well as the person who reviewed the work and the date of such review. Okay. So somebody who reviews the work should be able to understand not only what work was done, but who did it and when they did it. Form, content, and extent of audit documentation will depend on factors such as the size and complexity of the entity, the identified risk and material misstatement, and the nature of the audit procedures performed, as well as other factors. There is no one-size-fits-all process for audit documentation. It can vary in length and consistency and content. So it's going to be contingent on what the nature of a particular audit is and who is on the audit engagement. That's basically I can give you. All right. So some examples of audit documentation as far as content, we generally consider audit documentation to fall in one of two areas in the document and the reports. So we have stuff that's called current file documentation. Okay. Current file documentation relates to documents that are relating to the period under audit. So specific to the period under audit. So the copy of the financial statements, the auditor's report, auditor plan and programs, copies of excerpts of the board of committee minutes, committee meetings, the working trial balance are very important to have because that's going to be our primary source of reference for financial statement information. Adjusting or reclassification journal entries and working papers supporting financial statement accounts. I would also classify the earthware working papers that we've been doing so far are all examples of types of current file documentation, current file work papers. Then we have items that fall in what's called the permanent file. The permanent file is a little bit more stable, things that do not change from audit to audit. Generally, if they change during a period, it's minimal changes, okay? I'm not saying that they won't change. I'm saying that they change infrequently, okay? So copies of excerpts of the corporate charter, the chart of accounts, the organizational chart, copies of important contracts, such as long-term contracts, documentation of internal controls like flow charts, or if you remember from AIS, BPMN diagrams, terms of stock and bond issues, and then prior year's analytical procedures results. So these are all examples of documents that flow in those areas. And we're going to see many different examples of those as we move through this course. All right, next slide. One that I think is particularly important because I think that this is one of the things that gets very, very overlooked with respect to documentation. So we need to understand this. The manner in which documentation is formatted usually contains 3 general characteristics. Very important characteristics, though. So the first of these is going to be documentation should have a heading. So if you look at the documentation, the earthware documentation, earthware clothiers documentation we have, right in the middle of the top of the page, it usually says the name of the client. It says the date on which the the audit is taking place, the period over which covers, and then gives a general description of what the audit is, what this that particular piece of documentation covers. So, for example, remember the materiality workbook we looked at? The materiality workbook in the middle said earthware clothiers, period ending something December 31st, 2022, materiality workbook, something along those lines. I don't remember exactly, but it's basically that content. We should also note that within the context of headings, that we should also include that information about who conducted the audit, as well as who reviewed the audit work papers, who conducted the work and who reviewed the work. So everybody remember those work papers? There's a little bit of, there's a symbol up in the upper right-hand side. I'm doing the right-hand side on my side. So the upper right-hand side to you guys, there's like a little rectangle up there and there's some boxes up there. That's going to contain the initials of the people who conducted the audit, the initials of the who performed the audit, and the date that those were performed. That would be included in the heading information that we want to include, because that was something we said needs to be part of documentation. So heading, very important. Next, we've got one that sounds like 2, but it is consistent with 1. We have indexing and cross-referencing. All right. So indexing is just as it sounds. Think about your audit textbook. If I say, I want you to look up information on completeness, are you just going to read through the textbook until you find the word completeness and say, finally, I found it? So read through the hundreds and hundreds of pages it takes to get to the word completeness? Or what is more likely you're going to do? Go to the table of contents or go to the back of the book, the index, and search for completeness? Yes, that's kind of what we think about when we think about indexing. Work papers follow a similar pattern. There's going to be an index at the beginning that's going to say this work paper falls within this section of the working papers. Usually they use letters and numeric nomenclature to identify it. So say, for example, the testing on accounts receivable may fall in work paper section C, work paper number 8, so C-8. That would be an example of an index reference for accounts receivable testing. Why is this important? Because we need to know not only where the test work takes place, but what information it references. Would we say that accounts receivable balance information will be part of the trial balance? What do you guys think? Those of you who have looked at trial balance, which should be everybody in this room, would you see it a line item for account balance in a normal trial balance? The answer is yes, yes, absolutely, yes. Okay. Would you see a line item for accounts receivable in a trial balance? Yes, absolutely. Okay, good. Yeah, we would definitely see that there. So if we have the working trial balance in the work papers, we could say that's working paper A-1. And then I want to find where does my test work take place within the working papers? And I go down my trial balance and I see next to accounts receivable, I see C-8. That means I can turn the pages and I can see in section C-8. And it says, here's all the testing that I did for accounts receivable. And then I look at the balance of accounts receivable that's listed in that working paper and it says A-1. What is that referring back to? It's referring back to that trial balance, that working trial balance that we're working with. Okay. So what does that sound like? It sounds like I'm referring in one document to the other document, and then the other document referring back to the original document. That's called a cross-reference. It's called a cross-reference, which is referred back to back here. All important items in the working papers and the documentation should be cross-referenced. That means you should have an initial source a piece of information, and as well as the working information that you perform over that. I say important. If we talked about an account where doesn't have a material amount, we may not perform any testing over that account. So there's not going to be a cross-reference. There's probably going to be a notation that says this is not a material account. Speaking of notation, we have our third general characteristic, which is going to be tick marks. Okay, tick marks are just a fancy term for saying this is shorthand notation. So has anybody ever gone hiking with one of those old paper maps? Okay, you like have an old paper map and you're walking around and it has a symbol on it, and you look in the bottom left-hand corner or right-hand corner, it says, what does this symbol mean? Okay, what is that little symbol guide supposed to called in a map? It's a legend. Okay, tick marks are basically the same thing. We're going to perform lots and lots of different tests, lots and lots of different tests. Let's say you have to perform 100 tests and you have to say this was confirmed without exception, but you had to write it out for every single one of those tests. Would that get really old really fast? It's a little bit like The Simpsons, the intro to The Simpsons, where he's writing on the board and he's having to write the word out several times. That's punishment in grade school. It shouldn't be punishment for auditing. So basically, instead of writing it out 100 times, we say this symbol, which might be like a check mark or an oval with a slash through it or something along those lines, represents a particular procedure that we performed. And every time you see that symbol, you know that procedure was performed. So it's just shorthand notation for that. Again, these three are really important. There is 100% chance I will ask you a question on this on the exam, by the way, because I think it's important to know these. So not only know what these are, but know what they're representative of, what they're supposed to be. Okay, so keep that in mind, because I think that understanding notation within documentation is really important, because documentation itself is really important. So Sarbanes-Oxley Act, the PCOB standards require the documentation be routine for 7 years from the completion of the engagement, unless a longer period of time is required by law. So basically what happens is you finish an audit engagement. You have 45 days to archive that documents, and then you've got to store it for 7 years. The idea being is if something comes up and they have questions about the nature of the audit and the conclusion that you reached, you can pull out your documentation and show, here's where I have the detail. Back when I was still doing auditing, we were at the tail end of doing paper documentation. So anytime you had to file documentation, there were these storage facilities that would hold this for periods of time until you said, we can go ahead and get rid of it. Nowadays, they've got electronic repositories of information because most of the audits are electronic in nature. But the rules are still the same. For public company audits, it's 7 years. Do you think that this is the same guideline for private audits, by the way, for non-issue audits? It's not. It's a little bit shorter period of time for a private audit. It's actually 5 years. I won't test you on that, but just for a piece of information. I may test you on this. Who knows? Who knows? So that's pretty much it with the high points of data documentation. Again, I do think understanding the general rules around documentation are important. As far as examples of documentation, we will look at several examples throughout the rest of the semester. You already have several already with those work papers that you've been working through for the earthware clothiers assignment. So you might want to take a closer look at those as you're moving forward and say, okay, he mentioned heading. Where's the heading in this documentation? And that way you can find it, and then you can look at the references that I talked about. They also have indexing and cross-referencing, and then tick marks that take place in there as well. You won't see the cross-referencing because we're not going to look at a full population of working papers, but trust me when I say that's the purpose of having the indexing marks in there. All right. To wrap up this chapter, we're going to talk about analytical procedures, which can be powerful and versatile methods for collecting audit evidence and obtaining assurance. They're usually used to utilize the different phases of the engagement. So does everybody remember these? I said there were 3 phases of the engagement we can use analytical procedures. So first of these, preliminary analytical procedures, which is risk assessment. Then we can actually use it during the substantive phase of the audit, which is substantive analytical procedures. And we can use this during near the end of the audit, which are final analytical procedures. They actually have 3 different responsibilities in this point, okay? When we're doing preliminary analytical procedures, we're generally trying to find information about areas of concern that we should follow up on during the course of the engagement. With respect to substantive procedures, these are more used for the purpose of trying to develop estimates and to determine if we can rely on those estimates to gain assurance. So we're doing calculations. And then finally, near the end of the audit, this is just to make sure that everything makes sense, that nothing weird exists, that we believe that everything is consistent with our expectation. Now, an important note here, something that will come up, 2 of these phases are required under generally accepted auditing standards that we have to perform analytical procedures. And believe it or not, it's not going to be one of those is not going to be the one you think. We have to perform analytical procedures during preliminary phase or during risk assessment, so preliminary analytical procedures. We also are required to perform final analytical procedures. So at the beginning of the audit and the end of audit, analytical procedures are required by generally accepted auditing standards. Interestingly, substantive analytical procedures, which are probably the most common type, are not actually required under those standards, but they're generally a good idea. So when we talk about analytical procedures, there's 3 types that we generally can talk about with respect to this. And say, hold on, did I get, okay, all right. So near the end of the final procedures, okay. They can vary scope, they're generally 3 categories. First 2 of these you probably are fairly familiar with. Trend analysis, the analysis of changes in account over time, and ratio analysis, relationships between financial statement accounts and non-financial data. Few notes about these. These are exactly the same type of procedures that you performed in your finance classes or back in 221 when you did the financial analysis project. So you calculate financial ratios, you look at trends over time, and you determine if there's anything weird that comes up. Auditors can do exactly the same thing. In fact, you are going to do the same thing. That's part of your analytics project that's due a little bit later in the semester. Remember that Excel assignment that's in the syllabus? This is something you will do as part of that. So you're going to identify trends and you're going to look at ratios over time and see what's going to be happening. This is usually isolated to the preliminary analytical procedures and final analytical procedures. I say usually, that's not 100% confirmation, but for the most part, we do this at the beginning and the end of the audit. What we usually restrict to the center of the audit, which are substantive procedures, are going to be something called reasonableness analysis. This involves forming an expectation using a model. Some of these can be very, very easy. I've already talked about one that was pretty straightforward. I said, can anybody in this classroom develop an expectation of depreciation expense? And everybody was like, yes, Dr. Barnes. I'm willing and happy to do that because I remember everything about depreciation from my financial accounting classes, which was good because you do need to know that, okay? So some of those are pretty straightforward. Some other ones could use more complex models, especially if we think we can get a good estimation. Remember, is anybody currently taking cost accounting with Dr. Otero? Or I guess everybody's either currently taking it or has taken it before. So you know that linear regression stuff that she does, where you can develop an expectation. If you have enough variables, you can develop an expectation using those. So we could actually get even more precise models. There's a variety of different tools that we can use in this regard. So this you should be somewhat familiar with, all right? You should be familiar with that already because you've done that in previous classes. And I don't want to overlook that because I do think it's very important, but I don't think we need to talk too much about how to do that. But we do need to talk a little bit about this because this one's a little bit less familiar. Now, I know that you all have developed expectations and models before, but I want to talk about how do we incorporate the audit and what are some specific things that we need to consider. So first and foremost, we need to understand that we're developing an expectation and we have to have a comparative point for evaluating that expectation. So we're going to develop an expectation and then we're going to develop a tolerable difference, which sure sounds like tolerable misstatement and it's closely related, but it's a little bit different. Tolerable misstatement actually plays into it, but we'll talk about why in just a second. Then we're going to use that tolerable difference to compare what we expect to what was actually recorded. And if they're close enough, oftentimes we can say, we believe that this number is close enough to be correct, okay? There's not a material difference. We're going to accept them out as recorded. So if it's if the difference is not greater than tolerable difference, we're going to accept the amount. If the difference is greater than tolerable difference, that is a point in time where we as auditors have to say, we don't understand why there's a difference between what we expected to happen and what was recorded. And that's where we actually identify what are some other methods for investigation to understand. We're going to talk to management. We're going to try to identify procedures that are going to better define what the numbers should be and why the numbers that came up actually are. So can we corroborate the evidence? If that's the case, yes, we can accept them out. If not, we're going to have to expand our procedures. So we're going to have two very interesting analyses. We're going to do one here in class, which is a very simple analysis. Then get ready for homework. You've got one that's really, really complicated, okay? And so I won't say it's beyond your ability. It's just there's a lot more to it. So this first one I want you to note is a very simple one. The one that you do for homework, it's a lot more complex, but it's intentionally that way because we're going to talk a lot about some advantages and drawbacks of analytical procedures, particularly in this context. So let's go ahead and use a very simple one. So first of all, let's go ahead and talk about tolerable difference. Usually it's going to be lower than tolerable misstatement, but when we're testing an entire account, tolerable difference will often be equal to that account's tolerable misstatement. All right. Now, that is really good information to know because that actually gives us some guidelines about how we can use tolerable difference. If it's going to be an entire account, we'll just look at the tolerable misstatement and say, all right, that is our amount. But absent tolerable misstatement, and make a note of this because this is going to be very important. Absent information about tolerable misstatement, our guideline is generally going to be 5% of the recorded amount. And the only reason I mention that is because you're going to come into examples where you're not going to have tolerable misstatement listed, and you're going to say, I don't know what tolerable misstatement is. I can't make a decision. Don't suffer from decision paralysis. Just remember that if you don't have tolerable misstatement, you can ignore that piece of the information and just say 5% of the recorded amount. All right. So 5% of the entity's recorded amount, but not to exceed tolerable misstatement is our rule. Our guideline is generally going to be that first part, 5% of the recorded amount. All right. So 2021 income statement shows interest expense of $983,000. Now, where does interest expense come from? If the organization has a line of credit, is it easy to determine what interest expense should be? Yeah, a line of credit times whatever the interest rate is, that's interest expense, okay? So is it fair to say that we as auditors, if we had some preliminary data, we could develop an expectation for interest expense? I certainly hope so, because that's actually what we're about to do, okay? If we're not able to do that, then it's really going to make my next part of the presentation really awkward, all right? So we're going to assume that that's the case. So to conduct a substantive analytical procedure using this account, the auditor could develop an expectation using reasonableness analysis by obtaining the monthly balance, any monthly balance for a short-term line of credit and the monthly bank loan statement, and calculating the average monthly ending balance. So we're going to look what the ending balance for every month is. Then we're going to add those together and divide by 12, which is going to be the average monthly ending balance. Then we're going to determine the average interest rate for the year by looking at published rates in the monthly bank loan statement, okay? Then we're going to multiply the average times the previous the previous balance and compare the result to the recorded amount. All right. So pretty straightforward stuff. All right. Here's our list of the balance for each period. I add all these together, get 230,900. My average balance for the year was $19,242. That's not to say that was the balance at any point in time, but that was what the average was. All right. So that's pretty easy. Let's also assume that the interest to loan statements have been pretty stable over the year, fluctuating between 5 and 5.5%. Now, don't make this harder than it actually is. What would be a good average interest rate to use if we have this information? 5.25, the average of 5 and 5.5. That's all there is to it, okay? So let's use that as an expectation. Our expectation is $19,242,000 times 5.2% is $1,010,000. Question, okay? And by the way, you already know the answer to this because it's the answer to every accounting question I ever asked you, all right? Is this close enough to our recorded amount for us to accept the recorded amount? It depends, okay? What does it depend upon? It depends upon what is our tolerable difference. Remember, we said tolerable difference, our guideline is going to be 5% of the recorded amount. So 5% of 983,000 is going to be $49,150. So this number needs to be within $49,150 of this number for us to accept this number is correct. And if we do the math, 27,000 is less than $49,150. Hurrah! We've come to a close enough amount that we can accept this amount as being correct because the difference is so small that it's not relevant. Pretty straightforward, right? Could we do this for other things too? Could I have you develop an expectation for depreciation expense? Yes. Okay. Could I have you develop an expectation for allowance for doubtful accounts? You know those accounts receivable agings that you had to do back in financial accounting? We had to say, this is 1% uncollectible, this is 3% uncollectible, this is 6% uncollectible, so on and so forth, based on how long it's been outstanding. All of those are expectations that you've developed in financial accounting that you can replicate in this course. And it's pretty easy and pretty straightforward to do. Once you've developed your expectation, you can compare the expectation to the recorded amount by calculating the tolerable difference. That is the key to understanding analytical procedures. It's pretty straightforward. All right. With that, we are done. There's the golden rule. What is not documented is not done. So just keep that in mind. That's good, just advice for life, but definitely good advice when we talk about auditing. All right. Let me go ahead. Get some information set up here. Everybody remember this spreadsheet when they were doing their work? If you didn't remember that spreadsheet, you probably made a lot of guesses. If you remember the spreadsheet, you're like, wow, this is so easy. I can't believe Dr. Barnes just gave the answers to us. Well, I did give the answers to you, but please take diligent notes as we're going through this because there's going to be a lot of information that's not necessarily captured here. And by the way, if you're asking, do we need to memorize the information in the spreadsheet? I would say no. You're going to have to go far beyond memorization of the information in the spreadsheet. This is a starting point, okay? This is a starting point, but it's good information to know. All right. So let's go ahead, start working through this. What did I ask you to do? I asked you to answer 3 questions with respect to this problem. Let's see if I've got the chapter 5 discussion. Actually, I think I have it right up here. Okay. So I assigned everybody a type of evidence, all right? Type of evidence. And I asked you, had you answer 3 questions, or actually more than 3 questions, because I combined them into simple questions, but similar themes questions. So what is the procedure? What assertions? How is the evidence high, medium, or low reliability, and why? And the 3 phases audit, which of the phases can use this type of evidence, okay? And again, I told you to use that Excel file for some reference. It could answer 1 and 2, but not necessarily 3, but you also need to do a little bit of delving as to understanding why evidence was viewed in a particular way and be able to explain things. So we're going to start out, and I'm going to call on you at different sections. Let's see. I think I got our people online. Hopefully people online are ready and raring to go. We'll see if we can actually hear some people. If the bad news is if I call somebody online and I can't hear their net voice, then it's going to be all of the people in here. So the responsibility layers out to the more people in here, but we'll see what happens. All right, Jacob, you're first off. What is inspection of records and documents? Yeah, so basically anything that represents an accounting record of the organization that was used to develop an accounting estimate, this is something that we can look at and utilize as auditors. All right, what assertions can this evidence test? All of them. That's one great thing about the inspection records and documents is it allows you to test all of the different types of evidence. Okay, so all right, Saraswati, go to question number 2. What is the reliability of inspection records and documents?
High reliability.
Not quite high reliability. It's going to be medium reliability. All right. And what's the logical behind it to be a medium reliability? Because we got inspection records and documents here as a yellow, so medium reliability. What is the explanation behind this? Well, keep in mind, these are accounting records that were prepared by whom? By our client, okay? Which means that they were inspecting internally generated evidence. Now, just for that hierarchy, auditor generated evidence is the top, A. External evidence is below that, E. Internal evidence below that, I. O is oral evidence, and then U is you know it. All right. I can't believe I just did that. All right. So, Saraswati, still with you. During which of the 3 phases of audit can we use inspection of records and documents?
Risk assessment, like reviewing documents, helps identify areas where there might be risk of misstatement.
Good. Any of the other phases can we use inspection of records and documents?
Test of controls.
Okay. Any others?
I think substantive procedures also.
So all 3? That's correct. That's correct. All 3 phases. Inspection of records and documents is probably our overall most powerful test because it's medium reliability. It tests a lot of different assertions, and we can use it during every phase of the audit. This is one you will see frequently and you will employ frequently. Very, very important. Then we move on to vouching. Isaac, what is vouching?
It's the inspection of records and documents, but from top to bottom.
Okay. And so that's really important because top to bottom implies which management assertion? Existence. This is a specific inspection of records and documents that test a single assertion where it's going to talk about existence. By the way, one of your earthwork clothiers assignments will actually be very relevant to directional testing. You'll need to pay very close attention. It's important to note that when we talk about vouching, it's an existence test, and that means it moves from top to bottom. Okay. So that being said, is this type of evidence considered to be high, medium, or low reliability? Jack, what do you think? It's moderate to high. Yeah, it's considered to be higher than some other tests, but it's still going to be inspection of records and documents, which is going to be a client prepared document. Okay. And then what phase of the audit can we use? All 3. Very good. All right. Then we move on to tracing. McKenna, what is tracing?
It's tracing.
So what is the procedure for collecting this type of evidence? I guess is a better way to answer it. That's what I was asking.
It's bottom to top.
Okay. All right. So inspection of records and documents, but specifically looking at source documents and then taking the source documents and trying to determine if they occur in the record. So moving from what is basically the source documents are and looking at the system and seeing if that's actually part of the record. That's really important because it has to deal really with which assertion we're testing. Which one is it?
Completeness.
Completeness. It's just the opposite of vouching. Tracing moves from top or from bottom to top. Okay. And by the way, I'm going to put you on the spot, McKenna. What did I say about tracing on Monday, which you have to be very careful about?
Oh,
It's not a fair question because I'm putting you on the spot and you expect to answer. So remember that I said tracing is used frequently to mean other things that it doesn't necessarily represent. The book loves to use tracing when they don't mean tracing. When I say tracing, I want you to think test of completeness. When you see tracing in any other context, you need to ask the question, is this specifically referring to completeness? Because frequently it will not be. But in every context I will use it, I will be specifically talking about tracing as a test of completeness. High, medium, or low reliability. Ben, what do you think?
So medium to high reliability.
Okay, why? Good. Good. What phase of the audit can we use this? All three, and that's correct because it's still inspection recs of documents. Very good. All right, moving on. Joseph, Hannah is sick today, so you get all three today. So you're gonna have to have a superhuman effort for me. All right. So what is the procedure for inspection of tangible assets? So inspecting those tangible assets. What? So I talked about it and I said, what is it usually large assets or small assets? Large, very good. Usually property, plant, and equipment. Yeah. What assertion can this evidence test? Okay. Any others? No, it's just existence occurrence. Yeah, I trapped you, caught you in a trap. All right. No, it's just existence occurrence. Okay. What's the reliability of this particular test?
High.
Yeah, that's a good one because we're doing this as auditors and it's very high. It's one of our highest reliability tests. Okay. Phases of the audit, can we use this? All three minus two. That's right. During substantive procedures and substantive procedures only, unfortunately. It's a very limited test in what we can use, but it is a very powerful test and it tests that one assertion very, very well. So when we can use it, we're very happy to use it. Observation, Reed, what is that?
It's when the auditor is like physically observing processes and like internal controls.
Yeah. So we're curious about what goes on at the organization and we go and we take our clipboard and we say, go ahead and do your work. I'm just going to watch. Okay. So we watch that. We're going to talk a little bit about observation with respect to some of the work that we're doing in homework. But which assertions can observation test?
Again, test completeness and existence.
Can test completeness and existence. Yes. And then down here it says authorization, which again is not a real assertion, so we can ignore it, but also cut off. All right. So it's a little bit limited. This is kind of a nuanced one, test to those two, but completeness and existence, I would definitely say are kind of the top two, then possibly cut off in certain situations. So we want to test that. I wouldn't worry about authorization as I'm not going to probably test you too much about that. Good. Mary, what's the reliability on this particular test? Why? That's right. All right. So we're completely and totally relying on the client to provide us insight as to what's happening in the organization. If we're observing them act in a certain way, they may say, hey, this guy's watching me or this gal's watching me, and they're going to get really, really antsy and start acting differently. So that's something to keep in mind. Three phases of the audit. When can we use observation? Still Mary. All three. Yes. It's a very versatile test, not a very reliable test. Inquiry. Meg, what is inquiry?
It's basically like obtaining responses from people and that outside of it.
So we generally would not do it as much outside, but for the most part, we could. Inquiry is usually going to be inside the entity. Could we perform inquiry outside? It's occasionally. We usually have a different test for that, which we'll talk about. But I would agree that it's certainly possible. What assertions can it test? Yeah, inquiry is really nice. It can test all assertions. Okay. There's a problem though. Jack, what is that problem? What's the reliability of inquiry?
It's low
Low. Why is inquiry a low reliability?
because someone could lie about whatever they're being questioned about.
Jack, have you ever heard anybody lie to you?
Oh, of course, for sure.
Of course. Okay. Just asking, just personal question. All right. People can lie. And so when we have people lying, then we have to make sure we corroborate that information. So observation and inquiry are considered to be oral evidence. Oral evidence is extremely low reliability. Generally, we have to have other evidence to substantiate that. What three phases of audit can we use inquiry in, Jack?
All of the phases.
All the phases. Inquiry, like observation, is very, very versatile, just not very reliable. Okay. By the way, we've talked about our three items, our three types of evidence we can use in all three phases of the audit. We've talked about inspection, records of documents, observation, inquiry. For those of you who are rest, there's no more all three phases of the audit answers, by the way, just so you know. The pressure is on. The pressure is on. John, what's a confirmation?
It is written information that the auditor asked for from a third party.
Yes, third-party request. Very good. Okay. Which assertions can it test?
All of them.
All of them. Is there a caveat to that?
I'm pretty sure its primary is completeness and existence.
No traps for you. Very well done. Yeah. So confirmations can test all assertions and they can do so simultaneously frequently, but usually the primary assertion is going to depend on the nature of the account. If it's an asset account that we're testing, then usually it's going to be existence occurrence as a primary assertion. If it's a liability or an equity account, then usually it's going to be completeness is going to be our primary assertion. But it can test all assertions, which is really, really nice. All right. High, medium, and low reliability. Leanne, what do you think? Why is that?
From unbiased source, since it's a third party, but it can also be affected by factors such as the form of the confirmation, the prior experience of the entity, the nature of the information being concerned with the intended respondent.
That is an excellent response, and that's going to be something we talk about in more detail once we talking about how to conduct confirmation testing. But that's absolutely correct. If it does rely on external parties, so it's considered to be pretty high reliability, but it's not going to be highest reliability because there are external factors that can influence it. Whereas for auditor generated evidence, then we can control a lot of the flow of information. So good. Three-phase audit that we can use this. Which of the three phases can this be? Ashton, what do you think? Substantive procedures?
Yeah.
What about test of controls?
Yeah.
It can be used as test controls? Okay. Does anybody have a contradiction to that? It was a trap. Okay. Don't feel bad because I have to always ask this, but confirmations. Okay. Now I want to clarify this. When I say never, I don't truly mean never. There may be one scenario out of a million that can happen, but confirmations will never be used as a test of controls. And remember that for the exam, because there will be a question where you have to make a decision. Is confirmation an appropriate test for this test of controls? And the answer is no, because that's never a test of controls. We also cannot use them during risk assessment. There's always an exception to the rule, but for the most part, we're only going to use confirmation during substantive procedures. Okay. All right. Moving on. Recalculation. Jake, what's a recalculation? Good. Right. So we basically take a client calculation and we reperform that calculation ourselves. So good. Which assertions can it test? VAA. What about completeness? No, very good. You stood to your guns, and I admire that. Okay, it only tests VAA. It's a very, very, very important note to make because it only tests that single assertion. But that being said, Tyler, what is the level of reliability on this particular test?
Higher.
High. It's auditor generated evidence, so it's very high reliability. Which phase of the audit can we use recalculation?
Test of controls and substantive procedures.
That was 50% correct. So we cannot use it during test of controls, unfortunately, but it is very, very important to be able to use during substantive procedures. That being said, usually not used in test of controls. Could there be a scenario that it could be used? It is unclear, but generally speaking, not test of controls. Okay. Generally going to be just substantive procedures. All right. Ependra, reperformance. What is that? So yeah, you kind of use something very important when we talked about internal controls, but yeah, generally there's a task, auditor reperforms that task to see if they get the same results as the client. What assertions can it test? Yeah, so it's important to note, reperformance. It tests most of the assertions, except doesn't test rights and obligations, okay? Doesn't test rights and obligations because we can't reperform somebody's rights or obligations to put something in the financial statements, which means that it's likely probably a transactional test, something important to note, okay? So most of them does not test rights and obligations. Really, really weird one. We got to remember that. Anna, high medium or low reliability for reperformance?
It's high reliability because we're doing it ourselves.
That's right. The auditor's doing the work, and we know the auditor does the work. It's generally higher reliability. We are very overconfident about our own abilities right there. Okay. All right. That being said, Jack, what phase of the audit can we use this?
almost always used for testing controls.
Okay, it's almost always used to test controls. Can I use it during substantive procedures? Let's say I really want to use it during substantive procedures. Can I?
Yeah.
Yes, I can. Okay. But for the most part, we're going to look at it as primarily a test of controls. So it's important to know that. All right. With that, we're down to our last one. We got analytical procedures. Hey, we just talked about that. Andrew, what's analytical procedures?
It's evaluating financial and non-financial data and looking at the relationships between the plausible connections.
Good, good. And this one's a tricky one. What assertions can it test?
I believe it was accuracy and completeness.
Yes, VAA 90% of the time, but we can also test completeness occasionally, which, believe it or not, will come up in this course at least once, if not more. All right. Then Alex, you got the wrap up. What's the reliability of analytical procedures?
I said medium because it is not always from the accuracy or existence of an item.
Right. So we are talking about client provided information and usually high level detail. Even though the auditor is performing the work, we're still relying on the client to provide that detail. What phase of the audit can substantive procedures be used?
The substantive.
Or sorry, analytical procedures, not substantive procedures. My apologies. Okay, so risk assessment for preliminary analytic procedures and substantive analytical procedures can be used during substantive testing as well. Even though I said substantive procedures, I meant analytical procedures, but I didn't catch you off. Okay, that was not a trap. That was just me being old. All right. So yes, very good. Analytical procedures can be used during the first and last phases of this testing or testing sessions. Cannot be used as test of controls because it's usually high level of detail. Hopefully you took diligent notes on that because again, there will be a lot of questions moving forward from here throughout the rest of the semester on these types of concepts. Again, if you've not done so already, please make sure you take a look at this spreadsheet, get down the details of that and be prepared to talk about them. Homework ready on Friday. I'll see you all then.